The transportation and logistics industry has its own set of challenges. In the hot seat, industry thought leaders take on M&A and what's driving the future of transportation and logistics. Are you ready for the hot seat?
Welcome to In the Hot Seat with the Tenney Group. I'm Spencer Tenney. It's good to be with you. The election is over, and whatever you thought the tax landscape was going to be, you're wrong. But good news, with me in the hot seat today, I've got Andy Bollman, principal at the logistics practice of Clifton Larson Allen, and he's going to provide all kinds of answers for us. Andy, welcome to the hot seat.
Welcome. Thanks for having me, Spencer.
Before we heat things up, why don't you just take 30 seconds, tell us about your firm and the work that you're doing over there at CLA.
Absolutely. We're a professional services firm, and really we separate ourselves between our competitors in really two main ways. One is industry specialization, where we pride ourselves working and getting to know our clients, whether that's training, operating ourselves, getting involved in associations, and really giving back so we can really know and help our clients. The other is we really work with privately held businesses and their owners from start to finish.
Perfect. All right, let's jump right in, sir. So I think it's fair to say whether you were on the Trump train or whether you were the Joy group of Camp Harris, whatever you thought was going to be happening in the tax environment, it's probably a little bit different. So what were some, what were you preparing for, and what's changing now about the way that business owners are thinking about taxes in 2025?
Yeah, absolutely. It's been a wild 2 weeks, let's call it, right? 2 weeks ago, we weren't sure what to expect. You're planning for if Trump wins, if Harris wins, they had completely different tax plans. And so you were kind of planning for the gamut. And then on top of it, you have the Tax Cuts and Jobs Acts that are set to expire at the end of 2025. So if nothing changes, we have tax law changes at the end of 25. And then you're trying to plan on what happens depending upon the election. And so it was a wild ride trying to plan multiple different scenarios.
100%. And I don't think anybody was really baking in that the Republican Party would have the White House, the Senate, and the House of Representatives. And so some of these things, as we were talking about offline, the agenda priorities might be reprioritized a little bit, and even in the coming 12 to 24 months. So what do you see happening, and what recommendations are you making to business owners now that we've got a little bit of the lay of the land here?
Yeah, it's I don't think many people saw what happened transpire, right? And so what we're really thinking about is right now we know our Tax Cuts and Jobs Acts are going to expire at the end of 2025. What Trump has talked about is making those permanent. What we're going off is the plan is probably going to be to have most of those, if not all of those cuts extended. What I'm trying to tell our clients is odds are our tax rates are not going to go up in the next 4 years. And so we don't know if they're going to go down, but I certainly don't think they're going to go up. And so now we're looking at, for 24 year-end planning and even 2025, what we may want to do is try to continue to defer income out into the future. Now, there are a few segments that maybe that'll change, but I think for the most part, that's what he's talked about. I think we got to kind of go with that, especially with the House and the Senate both being on the Republican side.
Yeah, and obviously that's very different than what you might have been recommending had Kamala been elected. So what would the recommendation have been? Obviously she had some proposed capital gains hikes. So what would your recommendation? How would your recommendations have been different to your client had the outcome been different?
Yeah, it was really going the completely opposite way. It was going to be, how do we find ways to maybe push expenses out into the future, try to pull income into 2024, into 2025, with the understanding that we'd probably have lower tax rates today than maybe we would in the future, right? And so some of those things, as our clients are looking to, do we buy equipment by year end? Do we buy equipment in first quarter? Some of those types of decisions, trying to figure out where do we want to have deductions.
Right.
So
we want to kick those expenses down the road, but as the expenses, as we do that, we're also projecting that probably coming out of a very soft freight market, a forever soft freight market, what's felt like, but also, in over the next 4 years, the general sentiment is that business conditions are going to be pretty strong. And so, both from a regulatory environment, from a tax environment, specific to transportation logistics. So you and I were talking about offline, a huge intersection of our worlds, of course, M&A, but also in succession planning. And so what does this mean? What might business owners who have multi-generational families who have been planning about some type of transition to the next generation, what does this election outcome do to the potential timing of some of those events? What should they be thinking about?
Yeah, the one thing that the election Trump hasn't talked about is what are his thoughts on extending that federal lifetime exemption on the gifting stance, on the estate limits. So it's hard to know what will happen there, but I think, like he's talked about, he's trying to push everything and extend and make them permanent. I would think, if anything, what we want to try to look at is the values of these companies today, right? As you said, we've been in this forever freight market lull. The values of most of these privately held businesses probably dropped a good amount in the last 12, 24 months. For those companies that are really looking to transition from a family standpoint, going from one generation to another, now might be a really good time to lock in those low values and transition it to the next generation, whether it's gifting, whether it's moving it to a trust, something along those lines, but where we can lock in those low values today instead of where we think they might come out as we get out of this market, out of this lull.
Yeah. So said another way, business owners that without any question fully intend to either gift or have an internal transaction with a family member, it behooves them from a tax efficiency standpoint to do that when the business is valued at its lowest point, versus when the market increases and you have to have a transaction that can withstand the scrutiny of the IRS.
Yes.
Then you want to be mindful of the realities around that transaction. So I think that's a great point. It's something that you brought up before we even got online here. I was like, that's an exceptional thing that so many of our network and the folks that we serve have that element, and they may not be completely resolved to that internal transaction, but I do think providing that data and that reality to them perhaps helps them kind of arrive at the right decision sooner than later. And I think that's helpful.
It's one maybe data point in that decision making process, right?
That's a good way to say it. It's not going to sway whether or not they're going to do it, but if they've been kind of kicking the can down the road and they just procrastinating, this is something that they should probably take into consideration.
Exactly, right? I mean, there's always the cash needs of mom and dad, or right? There's a lot of different factors, but one of them I think is definitely these values. And if we can lock in those values from a tax efficiency standpoint, it probably makes a lot of sense.
Yeah. So what are some of the other things that you and your team, and again, I don't think some people understand how many trucking and logistics clients that you actually serve. So before I go to this question, just give us a little bit of the landscape on that, just so that they have an appreciation for that.
Yeah, we serve thousands of trucking and transportation clients across the country, all privately held, anywhere from sole practitioners, right, owner operators, all the way up to 1,000 fleet carriers.
Yeah. So let's talk about those, because it's been an incredibly challenging period. So what are you hearing from them? Because we're in a year where we've got some tax things and you have a lot of conversations. What's the temperature? How are people feeling about the future of trucking?
Yeah, it's an interesting way to phrase it. Like I said, I've had a lot of conversations in the last 2-3 weeks. 2-3 weeks ago, maybe the temperature was a little different than it is this week. Everyone's been struggling. They're waiting for rates to kick up. Everyone's optimistic. Things will turn here eventually. I think now we've got the election past us. We have some certainty. We have what we think is going to be 4 years of business-friendly, environmental-friendly environment for our industry. a lot of our clients are thinking, hey, this will start turning and get us out of this recession that we're in. We'll see how long it takes, kind of like you and I had talked about. It may take a little longer than we think, but I think the clients I've talked to this week, they're a lot more optimistic than they were 2-3 weeks ago.
Yeah, and I think that, like, you realize how badly we've needed a win of some kind, and I think, and I say that just from a, it has nothing to do with the political preferences. It's just one thing after another over the last 3 years. There just has not been a lot of positive things to bank on, and I think in general this was such a huge boost for our industry colleagues, and so let's talk about that. Obviously, the tax environment likely to be more aligned with what allows owners in this industry to find multiple paths to profitability. But still, there's challenges. So what are some of the great things that, or great challenges that you see business owners being concerned about in 2025?
I think taxes are still going to be on the list. A lot of our clients are still struggling, but because of the tax laws we kind of have right now, even though we're struggling, maybe losing money, we still might be in a position where we're actually still owing some taxes, whether it's cash basis. We haven't been buying equipment because of cash flow needs, so we've had less deductions. So I think a lot of clients are going to end up in a spot where we may be losing money and still owe taxes. So I think that's a concern. I think they're also starting to get concerned with equipment and getting it out. I think a lot of clients haven't continued with their cycle, and so now they might have a year or two to kind of catch up with equipment, and that might put some strain on the business. Those are the two big ones that I see.
Yeah, and then in addition to that, just maybe they bit off a little more than they could chew in 22 and 23, and and have really, really challenging rates to deal with presently. So I think there's still a lot to wrestle with. But I want to talk about tax planning, because obviously that's your specialty. You have so many clients. When you think about that, like top 1 to 2% of your dream clients that do all the right things and consequently own the most profitable businesses, they make the right strategic moves based on being in command of the right data points. Can you share with us what are some of the best practices specific to tax planning? What does that look like? What are some of the disciplines that they are integrating into their business and their conversations and their strategy that allows them to experience just a different level of success than the rest of the 98%?
Sure. It's a great question. No client is absolute, right? But I think a lot of them are doing a lot of the same things. They're being very smart with their cash, right? They are being very smart with how they make purchases and planning them out, spreading them out, making sure that they can take advantage of deductions when they need to, giving themselves some flexibility. And I think a lot of them are taking advantage of certain tax credits that maybe others aren't, whether it's fuel tax credits, whether it's energy tax credits, work opportunity tax credits. They're taking advantage of some of the tax law benefits that are available to everybody, and they're really taking advantage of them and using them to their own benefit.
So give us a short explanation of each of those, because I'm sure not everybody even knows that those are even available. So what is it, and what's the actual benefit tied to it?
Sure, tax credits. So we have a lot of fuel tax credits available. Most of them, think about our reefer carriers, making sure that they're taking advantage of those credits, those off-highway business. They go to the pump, fill up the trailers. It has the tax already included from the pump, right? We can get that cash back. Energy tax credits for some of those very large carriers, mainly probably corporate C Corp carriers. There are some benefits that came out of the Inflation Reduction Act where taxpayers are actually able to purchase energy tax credits from a third party. Think of a green energy builder, producer, someone that maybe built something, got a tax credit, but couldn't use it, they're able to purchase maybe $1 million tax credit, for example, at 90 cents on the dollar. And so they're able to utilize $1 million tax credit, but only spend 900,000 of cash. Something like that. Work opportunity tax credits. That's where you get tax credits for hiring employees based on certain criteria, where they live, what their background is, things like that. But you can get some credits from the government for hiring individuals. And so it's just making smart business decisions with some of these things.
Yeah. So why, if that's available, call it free money, why don't more people do it or take advantage of it?
Some of it's they don't know about them.
Mm-hmm.
Some of it's, you look at employees, right? With this work opportunity tax credit, it's out there, it's available for everybody, but you also need to be able to find that employee that fits that criteria, right? Maybe they don't live in that designated area. Maybe they don't have a military background, right? So you have that. Some of it's they just don't do the paperwork on the front end. With something like that, you have to file the paperwork within 28 days. So once, after they hire, so sometimes just we don't have the complexity within our HR departments to get it done.
And then once you discover it, you realize you already missed the window to capitalize on it.
Exactly. It's too late.
Interesting. So do you find that there are certain profiles or size of company that, in terms of just, sophistication and just infrastructure in general, that you see being more effective in fully capitalizing on these types of benefits?
Yeah, you really do. And it's probably in that maybe 100 truck fleet area. At that point, you have maybe a sophisticated enough accounting department, HR department that can start handling some of these things. When you have anything kind of under, what you kind of find is those departments have multiple hats, right? They might do some safety, they might do some recruiting. So they're kind of being pulled in some various directions, which pulls them away from some of these opportunities because they just don't have the time to research and understand that they're out there.
Yeah. No, that makes sense. I'm curious, what's maybe, a tax credit out there or some other type of tax strategy that you find you and your team kind of banging your hands on the desk and you're like, please listen to me. Why won't you do that? What's out there that just doesn't, for whatever reason, get traction with trucking logistics companies? That's just, right there in terms of low hanging fruit.
Two big ones stick out. One of them is being cash basis for tax purposes. For most people, internal books, they're on the accrual method of taxation, which basically means as we sell, provide some service, we're going to record the revenue, we're going to record a receivable. And when we, buy something, we're going to put it into accounts payable and we're going to expense it. However, for tax purposes, we can elect into this cash method of accounting, which effectively means we're not going to pick up the income until we receive the cash. And so if we have $1 million of receivables at year end, I haven't collected that. I'm not going to pay tax on that $1 million. I'm going to defer that into the next year. But then on the flip side, if I have $400,000 of payables, carrier settlements, I haven't paid those. I don't get that $400,000 deduction. But when you look at them net, I can defer $600,000 of income into the next year. And so we find a lot of carriers aren't taking advantage of that. Sometimes they have a method and a reason why. But if you're able to defer income into the future, utilize that cash now, invest in your company and your fleet, a lot of times that makes sense. The other one that kind of sticks out to me is just structuring. You deal with this a lot, Spencer. I'm sure you see this. A lot of times we come in and we see everything under one roof, or we see multiple different companies, or maybe from a tax standpoint, we can't take advantage of the income and losses. Let's just say we have two companies. The trucking company may make some money, and then we have an equipment leasing company that has a bunch of depreciation that we can write off. We may not be able to offset my income from the trucking company with my depreciation from my equipment leasing company. And so a lot of times it's getting in and said, maybe we need a holding company structure, one overarching company that owns the others, and therefore the income will flow up into the holding company, it offsets there, and then it'll flow up into the owner, so we know we can offset it.
Well, and I imagine there's some risk mitigation tied to that as well.
There certainly is.
Yeah. So some of our friends in the insurance solution world, I'm sure they're clapping their hands and say, "Go, Andy, let's do this," because I know that's what they're trying to set up from a corporate structure to
exactly
spread out their risk and give them some additional options there. So obviously, I mentioned our worlds kind of intersect on the M&A side. One of the trends that continues to be growing is when we get involved in transactions and we have a quality of earnings analysis on the front end of a actual transaction. And so number one, for our audience, can you just explain what a quality of earnings analysis is, and why would someone want to do that on a front side of a transaction versus, what's more traditionally part of the due diligence on the path to close when buyers and sellers are already agreed on the money and they're just kind of firming up for everybody else that is going to help get that deal done. So if you would just kind of unpack that a little bit for us.
Yeah, and from a high level, really the quality of earnings is it's basically looking at it and taking an audit and trying to identify risks on the front end, whether that's tax owed, whether it's state nexus questions, problems, whether it's we have some issues with certain methods or way we're deducting things, and trying to identify those on the front end. And really why we're doing that is if we can identify them on the front end, we can mitigate them before we go into a buyer and hopefully recoup and get more on a multiple or on a overall dollar standpoint than maybe we would on the back end.
Yeah. And so obviously it wouldn't be increasing as part of normalizing as part of a process if it didn't have some benefits. So clearly there's some connection there. So I appreciate you kind of sharing that with our audience, because I just want them to be aware of what's happening out there.
Yeah, I think to your point, Spence, there's a great benefit to doing those on the front end and trying to identify some of these maybe risk issues or issues that these buyers may come in and spot and try to poke some holes in.
Well, and then in addition to that, some of it is just like, wow, if they have that much visibility on the front end and they're looking at 4 or 5 different potential acquisition options, it just makes it really easy to kind of get alignment at a investment committee level to go put real resources behind a deal. And that's
exactly.
that's what we're experiencing. So it's more of a function of differentiation from who else is potentially in the market available to purchase. And so all of it comes back to dollar bills. But if you don't get in there,
that's right.
but if you don't need, but if you don't get on the dance floor, there is no dollar bill. So there you go. Couple more questions. You've done well, sir. I'm so proud. I know I not everybody can take the heat quite like you can. So
I'm sweating over here. I'm drinking water, so I'll do my best here.
So so what predictions do you have? We're coming in, like we said, there's mixed opinions. FreightWaves just put a tombstone for all the world to see in terms of the end of the freight recession. What's a prediction that you have for 2025 as it relates to finance, M&A, anything else that is kind of in that world?
Boy, that's a tough one. I think one, we are probably going to get tax rates and tax cuts extended. I think we'll see a couple more interest rate cuts. And I think eventually we will get out of this freight recession at some point. But kind of to our earlier comments before this, I think it'll take maybe a little longer than people are thinking.
Right. So in other words, don't go buy 100 trucks just yet.
Not quite yet.
You might let that interest rate dial down just a little bit, and then let's get to work. All right, sir. Last question. A little bit of a wild card for you. Had a great time. Visit your office a couple months ago. You have a great team. What are some of the things that you want to and I was reminded of all of the sports franchises in Minneapolis. So I got to know if you got a couple buddies and you got a Saturday night pro sports event of some kind, all the options in Minneapolis, where are you going to go? Box seats, the whole thing's, where do you got to be?
You know, I'm partial to the Vikings, but I'd say if you're going to experience it, it's hard to beat going to a Wild game at the XL Center.
Really?
That's a blast. It really is.
Well, now I've got another one. I got another thing to do when I come to town, apparently.
Only problem is you got to come up when it's a little colder up here, Spencer.
Well, we'll
So
work on that.
Bring your coat. You'll be all right.
Well, listen, that's going to do it for us in the hot seat. I really appreciate all of your insights, Andy. We're going to see you soon down the road. But for now, that's going to do it. We will see you next time.